So remember this guy? Little Hercules. He was big about 20 years ago. Well, still big probably, but he was big in the news. So he's like 12 years old there. Okay, let's make this real simple. 12-year-olds shouldn't look like that. He's gone on record and talked about what that did to his body today. It really did a number on him, right? He grew too fast, too soon. Just did, all this stuff to his body when it was supposed to be growing and maturing. And yeah, he made a lot of money and he was very famous. And his dad had him flying around the country, literally would do push-ups. People pay money and they'd eat food and, he'd do push-ups for him. I mean, like that's what his job was. Now today, he doesn't look anything like that. Looks more like a normal person, still pretty physically fit. He works like at SeaWorld. He's one of the stunt guys, the guys that jump in the air and go through the shark's mouth and all that stuff. That's what he does now. But again, what he talks about, he's, it really, really did a number on him by growing too much too fast. Now, ever heard of this guy? Robert Wadlow, almost 9 foot tall, one of the tallest human beings, probably the tallest human being we've ever seen on our earth, right? Pituitary issues, you can see there, obviously extremely tall. The sad thing about him, grew too fast, too much too soon. He died at 23 years old, a horrible death. His legs split open, the bone split open. He had to use a cane and crutches. Imagine how tall the crutches the guy uses, 6 foot tall crutches. The last couple of years of his life. So this superhuman looking person, yet extremely weak and brittle because, again, he grew too fast and did too much. If you look at redwood trees out in Oregon, so right, the big trees, if they don't have mommy and daddy trees around them, they'll grow super fast. You know what happens, though, 10, 20 years later? Those trees are much more likely to get an infection, get something wrong with them, rot out and die because they didn't grow slowly. The trees that grow slower, mommy and daddy trees that kind of hog some of the sunlight, those grow and they form a really, really good base, right? That's what you need. So what I'm getting at is you grow too far too fast. It's not always a good thing. Now I'm going to bring this back to what in the world is this guy talking about? The stock market. There's something called secular bull markets and secular bear markets. All you got to know is this, and this chart is a long-term chart of the S&P 500. There have been periods for decades when stocks have gone higher. There have been periods for decades when stocks literally go sideways. So let's just look at that first shaded area on the left there, 1950 to 1968, 18-year bull market, all right? Then you see the next shaded area, 80 to 2000, 20-year bull market. What happened in the 70s, though? High inflation, virtually no gains. After the Great Depression from 1929 peak till 1954, 25 years, stock market went nowhere. You get these big cycles. Now, what I want to talk about is the 7-year itch. You've all heard about it, right? After 7 years, you get tired of a relationship, a job, a car. The stock market's kind of human. I know there's a lot of computers out there anymore, but listen to this. See the first circle in red on the left there, 1957, 7 years in a recession and a bear market. Go to the next secular bull market that kicked off in 1980. Add 7 to 1980, and what do you get? 1987, a 34% correction, similar to the 34% correction we just saw last year, and then eventually move back higher, but the 7-year itch. Now, fast forward to the 2000s, all right? The 2000s were a worse decade for stocks than the 30s. I'll say that again. The 2000s were worse for stock investors than the 30s, all right? So that's terrible. We all had to live through it, right? That's just part of investing. That just sometimes are good, sometimes are bad. Well, that was one of the worst we've ever seen. The good news is we planted those seeds. We grew. The roots were strong. The base was strong. After 13 years, from 2000 to 2013, the S&P went literally nowhere. Then it broke out in 2013. Add 7 to 2013, and what do you get? The 7-year itch. We had no idea at LPL Research that we would have a 34% correction in 21 business day or trading days, the fastest bear market ever, fastest 30% correction ever, most vicious recession since Great Depression, all that stuff. What we did know, though, was coming in last year, the 7-year itch was potentially something that was out there. But what did Mark Twain tell us? History doesn't repeat itself, but it often rhymes. If history's rhyming, what's happened after the 7-year itch multiple times? Stocks went up from 57 to 68, and stocks went up from 87 to 2000. We could have potentially another decade of stock gains. And I know that sounds crazy, But again, the reason we're so optimistic in a secular bull market is because how horrible from 2000 to 2013, stocks went nowhere for 13 years. And now we've got this major base and we just had the 7-year itch. So this is a big picture view of the world. Believe me, more short-term. I probably got a little more concerned short-term, but we can talk about that. But if you're long-term investment holders looking to retire in 5, 10, 15 years, guys, things look really good, and any and all weakness probably is going to be led to eventual newer highs down the road. So